What's up guys, it's Matt, the Fruitful Investor. Interest rates are going up again and you'll likely hear this a few more times this year. So here's something that everyone wants to know. How many more interest rate hikes will there be? How is this going to affect the housing market? And how does this exactly control inflation? The media keeps reporting that rising rates will keep inflation in check, but how so? In this video, I'm going to break down the basics of economics and how rising interest rates will very likely bring inflation down. But most importantly, I'm going to show you how to inflation-proof your money so you're not as heavily affected as a lot of people are going to be. Because if this keeps up, it will get very ugly for a lot of people. Let's get into the video. Alright guys, if you're new to the channel, I've been investing since 2011. I've owned over 45 individual rental properties and I flipped over 100 homes. With also being heavily invested in the stock and crypto market, business and investing is right up my alley. So I'm sure you've seen the devastating effects of inflation with your own eyes pretty much everywhere. Gas is up to $7 a gallon in some states and $5 a gallon nationwide. Groceries, electricity, new and used cars, housing, you name it. Almost everything in our society at this point costs more now than it did just a year ago. Now, the reason why raising rates hasn't totally solved inflation just yet is because it has a lagged effect. It can take 1 to 2 years to really see the effects of these policy changes ripple out into the economy. So you may be asking, well, who's making all of the decisions for this? The Federal Reserve, which is the nation's central bank, has a very important job, and that's to keep prices stable while keeping the economy moving and growing. And one of their main tools at their disposal is to control the federal funds rate. They can either stimulate the economy by lowering the rate, also known as quantitative easing or QE, or they can slow down the economy by raising the rates called quantitative tightening or QT. Now, the exact science of how this plays out in either scenario can literally take many university courses at top Ivy League colleges, but we just don't have time for that. So as promised, I'm gonna break down in real easy layman's terms how QE and QT work throughout the economy. And by the end of this video, you'll see exactly why the feds are doing what they're doing and what to do about it for yourself. Now, the latest rate hike was an increase of 0.75% or 75 basis points, which increased the federal funds rate to a range of about 1.5 to 1.75%. This has been the largest single rate hike since 1994. Now, if all of this financial jargon is going right over your head, don't worry. Here's a basic breakdown. The federal funds rate is the interest rate that commercial banks borrow and lend to each other at. Now, this federal funds rate pretty much affects everything in our lives because as it raises or lowers, it trickles down the economy to us, the peasants. For example, all of the major banks like Chase, Bank of America, Wells Fargo, and so on, they're in the business to make a profit. Obviously. So if they're lending money to me on a mortgage or a business loan and the federal funds rate is currently 1.75%, they're going to lend that money to me to buy my home at 5.8%, which is currently the average 30-year mortgage rate right now, and they're essentially gonna profit that in between. Now, it's a little more complicated than that, but that's essentially what the banks are doing. Now, if the Federal Reserve raises rates by another 50 basis points in July, which is expected, if I buy that same house after the next rate announcement, instead of getting 5.8%, I'm probably gonna be getting somewhere around 6.3% now for the same house. So you can see how eventually this is really gonna calm down the real estate market and really start affecting a lot of people soon. If people are paying more for their homes every single month because they have a higher mortgage payment, they're gonna have less money to spend on things, especially frivolous things, which is exactly what the Federal Reserve and the government want from everyone right now. How does this affect or fix inflation? Well, if the common middle class people have less money to spend, since it's likely going all to their mortgage payments every single month, they're spending less money at restaurants, at malls, stores, on gas and food, etc. What do you think comes next? Well, in a capitalist society, which is what we're in, if a business has less customers coming every day, how do you think they're gonna attract more customers to come back in? They're gonna have to lower their prices and potentially have more sales. Grocery store owners will be forced to lower the cost of eggs, cheese, milk, etc., which means they'll have to go back to their suppliers and say, look, as a business, I can't continue to keep paying your prices. You need to lower yours now. So you can see the chain reaction this has on lowering the prices of goods and services throughout the economy, which goes back to the thesis to all of this badness. What's the biggest problem right now? Everything is is getting too expensive and growing more expensive too fast. People's income growth from their yearly raises at work aren't catching up. So by the central bank essentially making the people poorer, it's forcing businesses and suppliers to eventually lower their prices to bring the customers back into the stores. Now, if gas, food, housing, cars, and so on get cheaper, inflation will essentially go away. That is a very basic breakdown on why the Fed is raising rates and how they think this is going to control inflation and essentially lead to deflation through using quantitative tightening. Now, we can sit here and talk for hours about how we got to this point, how is inflation so bad, but we don't have time for that. But one of the biggest reasons right now causing inflation is a tight and overwhelmed supply chain still recovering from the COVID lockdowns. Everyone was locked up for 2 years and not doing much, and now that the world is waking up, we just can't keep up with the demand of goods and services. We need more employees to fill these jobs and looser COVID restrictions so things can get shipped around the world faster. But we don't have that yet. But we will. Many economists think, and myself included, that once the supply chain gets moving again at full capacity, that this alone will serve a huge blow to inflation and the prices of everything is gonna start coming down. But we can sit here all day and speculate who's at fault and why we're here. And that is the government's fault. It's always the government's fault, right? But with all that said, I don't know about you, but I'm an action taker. I can't just sit here with my woes and complain about how the government caused all of this, how inflation is making it impossible for me to get ahead. So I'm gonna end this video off on how you can protect yourself against inflation and how you can actually take advantage of what's going on here. Because one thing's for sure, there will be a massive wealth transfer coming. So which end are you gonna be on? One of the best things you can do is to buy quality assets. So assets are very protected with inflation because they typically go up with inflation. So quality stocks would be a great place to start. It's a very low barrier to entry. So for me, I put a lot of my money in the stock market in the S&P 500, which I put in through the SPY ETF, which is just a representation of the S&P 500. So like 80% of the money I invest in stocks just really goes to that ETF. Now, if you don't know what the SPY is or what the S&P 500 is, it is the top 500 companies in America, all pooled in, and you're investing in that jar or that whole pool together. So all the companies, you're just buying a little piece of everything. So it's very stable. It kind of moves slower than the market rather than putting all of your money in, let's say, Facebook stock. And if something happens with that company, or if Mark Zuckerberg says something funny on Twitter or something bad and the stock drops, at least not all your money is tied into one company and going down. I like to invest in multiple companies. And it's shown that if you invest in the S&P 500 over time, even during all the recessions we've had, all the wars, all the financial problems, all the inflation problems, which by the way, this isn't new, we've seen this all before. If you were invested in the S&P 500 and you waited, you came out the other end much wealthier. Why? Stocks, and quality stocks specifically, are very inflation proof because don't forget, these are real companies making real products throughout tough times for sure, but they're having real sales, real customers, and they're growing all the time, right? So like Apple, you think they're gonna stop making phones and iPads and computers in this next couple years with this crazy recession and inflation? No, they're still gonna be innovating, still making real products and selling those products to real people. So their company has to grow, the stock has to go up. If you're investing in Microsoft, Tesla, right, like quality companies, these companies are gonna continue innovating and providing goods and services to people. So they will go up over time. The next asset class you can really buy, and my favorite, is real estate. So this is super inflation proof-ish. Not everything is inflation proof totally, but ish, because just like quality stocks and quality companies making real products, people always need a house to live in, always. They have to be covered up by the rain, they have to be warm, they're raising their kids in there. People will always need housing. It's actually like a must. You need a house to live in. So if you can be a provider of a quality property in a quality area, which is my entire channel, if you want to learn about real estate investing and how to do it, like this channel has so many videos, but we really want to focus on quality in tough times, quality stocks and quality real estate. Don't be buying in cheaper towns, in country towns that have no jobs or no industries. I know it's cheaper, but in tough times like this, you really want to be buying in really good quality places that people are actually living. There's actual jobs there and they're going to stay there throughout a tough time or throughout a recession. So make sure you're buying some good quality real estate. There's no better way to grow your wealth than to be a real estate investor. I think it's said that over 90% of all millionaires did so through real estate. Again, I can't talk more about real estate. I can't talk enough is what I meant to say, because that's what I do. Like 90% of my money goes into real estate. It's been worked out very well for me. I've made millions and millions of dollars through tough times, good times. I've been through an entire real estate cycle or two. Real estate is tried and true. People will always need a home to live in, and if you can be a provider of a good quality house, which is what I stand by. If you watch my channel, you see our properties are after renovations. Man, we provide very good quality homes, and we make a lot of money, and we are great to people, and they are great to us. Our tenants are awesome. And the last thing you can do if investing in the stock market or investing in real estate is not for you, although I would say make it for you, you need to invest. But if you don't want to do that, I understand. Next thing you can do is to become a specialist and be very, very valuable. So whatever job you're in, whatever industry, if you're a photographer, a carpenter, an accountant, whatever, a lawyer, become the very, very best, specialize in a niche within that industry and just kill it. That's what I've done, again, with real estate, or with me as a realtor. I specialized only with real estate investors in my local area. I really set myself apart from other realtors in my local town because it's all I do is investing. I don't sell the average home with a white picket fence to Lucy and John. I don't do that, man. I only do real estate investing. That really set myself apart, and my business grew very, very fast because of that. And also within my investing life of being a real estate investor, I specialized at the start only with single family properties in one specific area, so that when I went to attract joint venture partners, which is how I scaled my business very, very quickly, and we bought so many properties, is because I was a specialist. They were watching me on YouTube and they said, man, I want to invest in Matt's backyard. There's nobody that knows this area better than him. He's killing his renovations. Why would I invest with anybody else? I'm gonna go right to the expert and invest with him. So if you really want to set yourself apart with your investments, with your job, with your industry, really become a specialist and become very, very valuable at what you do. Anyway, guys, that's the video. I hope you enjoyed it. I hope you learned a lot. If you did, smash the like button. Also hit that subscribe button and get 2 financial videos every single week. I'll see you in the next video.